Hello, everybody. This is Toni Turner, and welcome to the market now as of Thursday, August 20th at about 11:30 a.m. Eastern. First, I will be traveling tomorrow. That's Friday. So if you're surprised to see the market now one day early, please know I wanted you to be able to have it sooner or later. So that's why we're doing it today. And now on to the market. The number of Americans filing a new claim for unemployment benefits rose unexpectedly this morning back to above the 1 million mark last week. This is a setback for the struggling U.S. jobs market. The previous week's level had marked the first time since March that new claims had registered below 1 million. With the latest data, new weekly claims have been below the 1 million mark for 21 of the last 22 weeks, so that's still a good number, especially in the face of doing all this during a pandemic. And now let's go on to three charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock or the ETF that closely follows our S&P 500 index. Now today I left up a couple of extra moving averages on this chart, so don't worry about it. We still have the red line, which is the 20-day moving average, the green line, which is the 50-day, and the black line, which is the 200-day moving average. The other two, the pink line is the 8-day moving average, and the blue line is the 13-day. You don't have to worry about them, but they do show you a tighter trading range for the stocks that we're looking at. So they're more of to keep in mind for short-term trades, but I left them up for fun anyway. So when I captured this chart today, the SPY, the S&P 500 SPDR, was trading at $336.88. Now this past Tuesday, if you can see it here, it made a new all-time closing high, which was $338.64. That's about 30 cents or so higher than the past all-time high of $338.37 back in February. So we got a few cents higher. Now, in the past 3 weeks, as you can see, the SPY, since we had this little consolidation back here in July, the SPY has managed to actually walk up the 8-day moving average here, certainly stay above the 20-day. It has been consolidating a little bit, just real small moves here for the past trading week and a half. Even though we do have the pandemic and we are, of course, in the midst of kind of turbulent relations with China. Now, we look at this pattern, though, it certainly looks harmless enough. We're still in an uptrend. We don't really have much to complain about. If we look down at the 14-day RSI, it's been rambling along at the top, kind of banging its back on or its head, I should say, on the ceiling here of the RSI, the 14-day RSI. And the overbought mark here, as you all probably know by now, is 70. That line there represents 70. As we took this chart today, the RSI is at 65, so just slightly under the overbought area. Why do we care about the RSI and overbought? If you look back with me in June here, see when the RSI moved up and over the 70 line, within a few days, the SPY fell pretty dramatically. Not a long pullback, but certainly one that got our attention. So when the RSI, when the line for the RSI does go up and over the 70 level line, we do start paying attention. It did so the first week in August, but so far nothing's happened. We've got kind of quiet summer trading here, as we usually do. And again, today it's back down below that line at 65, but certainly near it. So now if we look at new resistance here, we have new resistance near term at $339. We have nearby support, certainly at the 20-day moving average coming in at 331.54. That would be considered support. Price support coming in here at about 327. More price support coming in here down around 323, and of course we've got the 50-day moving average coming in here at 320. So lots of potential support here on the chart should the SPY continue a little lower. Now in the coming weeks, that's what we're going to look for. Now that earnings season is mostly over, we will see if the SPY can climb back above here. Can it move back above the all-time closing high at 338.64? Or again, does it need to move down here toward the 20-day and take a summer rest? So for that, please trade carefully and please keep track of your protective stops. Our next chart here is a daily chart of the Invesco QQQ. You all know it as the NASDAQ 100. This is the ETF that closely follows our NASDAQ 100, a major index in the stock market, and of course its holdings are the large cap momentum stocks and tech leaders, the Amazons, Netflixes, Googles of the world. Now, as I captured this chart today, the QQQ was trading at $277.62. It did make an all-time high this closing high. Closing's important, guys. Closing is important. Closing, if traders and investors hold through the close, as we say, that means that there's more commitment there than if the close is lower. So if the close is at or near the high of the day, that means there is commitment involved. So it made a new all-time closing high this past Tuesday at $277.97. Well, we can call that new resistance at 278. So today, so far, it's back down to 277, very close to that all-time closing high. And we could possibly, at the close today, we could possibly get yet another new all-time closing high. That remains to be seen. Now, as we know, the QQQ has pretty much since its down move in March, or the move down that everybody made in March, it's come back up. It right at the beginning of April crossed over the red line, the 20-day moving average, and has literally been walking up the 20-day moving average now ever since that March low. So we can still look at that 20-day moving average pretty much as a guideline here, as a potential support line. Now that line comes in today at $268.76. And of course we have the important 50-day moving average, the green line, coming in, rising nicely under price, 20-day rising nicely under price, and the 50 days coming in at $258.61. So we haven't anything to complain about here. Do have a nice uptrend going on. Does that mean it will last forever? No. Why? Because the financial markets of industrialized nations move in cycles. So that goes for an intraday chart, a daily chart, a weekly, a monthly. All those price moves do move in cycles. And you can see little cycles here right on this chart. There's a cycle there, almost a complete one. There's a complete cycle there. Came back down to prior lows, higher low from the last low, but still came back down to where it was before. So please remember that markets move in cycles, even in the long term on a weekly chart, they certainly, or a monthly chart, or even a quarterly chart, they don't go up forever. That's why we're wise and we keep our protective stops in place. We want to be in the market when the getting's good, and most of us as traders want to be out of the market or even short the market when it is falling, and that's the overarching goal for most of us. Okay, we'll look at our final chart now. Our final chart today is the First Trust Dow Jones Internet Index Fund, symbol FDN. It has 41 holdings, and the top holdings are Amazon, Facebook, PayPal, Netflix, and Google, or Alphabet, I should call it. So this is one way of owning those big guys without putting out the huge prices that their individual stock shares, some of them hold. So today when I captured this chart, The FDN was trading at $187.45, near its all-time closing high, which was back on August 6th, of $187.56. So very near that all-time closing high, just like the QQQ is doing. And really a lot of the companies that are the top components of the QQQ are also the top components of the FDN, although again, this is an internet fund, so those stocks in this fund point right to the internet. Now from its low on March 15th, way back here, where did my cursor go? From the low back here on March the 15th, that low is at 105. You can see that the FDN, once in April, it jumped over its 20-day moving average, similar to the QQQ. It's been trading mostly above this red line, the 20-day, for all 5 months going on now. Now what we can see here is in the last month, since the end of July, the FDN has started to kind of consolidate here. We can see that the 50-day moving average is continuing to rise under price. That's good, that's favorable. But we can see here, if we look at it, that it is coming up here. We could almost call it a rising wedge here. And certainly it's a triangle, so it's going to break higher or lower here at some point. What I'm going to do, so I want to be wise here. If I get into the FDN, I'm going to scale in very gradually, again, because this formation is a pressure cooker and price generally moves. It breaks higher or it breaks lower. And we want to be long if it's higher, and we want to be out of it if it's lower. And I think it would probably be hard to convince me to sell short the FDN at any point here because of all the big names that large cap momentum stocks it has in it. But let's talk about going long here, at least that possibility. Now, we do know it's right at near all-time highs here, so going into the coming week, I'm going to keep an eye on the FDN, and as long as it remains above the green line, the 50-day moving average, which is coming in here at $177.50. Now, there's a couple of things I want you to keep in mind here. As long as it's trading above the green line, 50-day simple moving average, everybody can get that on their charts. And the QQQ remains positive. I want that leading. I want the QQQ to remain positive if I am to enter the FDN. So if those two things are in place, I may add a small position to my portfolio. I will place my initial stop down at $177.20, and that will be below the 50-day moving average. Now, if the FDN breaks above the all-time high at about 188 and closes above that number for at least 3 consecutive days, I may add to my position and turn my stop into a trailing stop. Okay, you got that? So you may want to keep an eye on the FDN in the coming week. And now, before we go on to final thoughts, please know that for a limited time only, we are offering all of my popular training programs at a 20% discount. So if you want to discover my simple yet powerful strategies for swing trading, trend trading, winning setups, we've got bottom fishing, and much, much more. These strategies that will help you increase your gains quickly and easily, then just go to the link on this screen right here, or simply click on the orange button below and check it out. And you can check out the programs you want and whatever you want. By entering 20 product at checkout, you will get a 20% discount. And again, this offer is for limited time only. And now for final thoughts. Let's think about this. Do you ever take a trade and then suffer regret or immediately second guess it? I did that a lot when I was new at trading. Do you ever enter a trade and then go, oh no, what was I thinking? Or do you immediately say, oh, why did I do that? Oh no, the Nasdaq's starting down here. Oh, it's going to go with it. So doing that over and over again, not a good idea. When we second guess our trades, we can immerse ourselves in a mire of stress, and that doesn't help your thinking. It's not good for your trades. It's not good for your account, and it certainly isn't good for your personal well-being. Now, many times when we regret entering trades or start second guessing, it's because we weren't sure of our plan. We weren't sure of our market evaluation. And we're like, oh no, I wasn't really sure of doing this. I just did it. And then when we overthink our trades, it can result from fear of losing money, very certainly, or fear of being wrong. Now, second guessing and overthinking can be a sign of a perfectionist personality. I know all about that because I have that malady. And those of us afflicted with this syndrome, we want to do everything just right, and we want the world around us to reflect our actions. Now, while we may be able to achieve this in quote-unquote real life, the stock market may not always agree with our view of the way things ought to be. So at the least, if you enter and then ponder all the reasons you could have or should have entered a different trade, it causes a lack of self-confidence. You're no longer calm and confident in your trading. So to stop second guessing in our trades, let's rewire our thinking. We have to accept that occasional losses are part of the game. I have losses. Everybody has losses. Anybody who says they don't occasionally is maybe growing a Pinocchio nose. And if your plans are correct, and if they're well thought through, and if they match the current market environment, your wins will wipe out your losses, and you should have a net profit. Everybody has a ratio of wins to loses. Now, we also need to be sure of our trading plan. You need, again, well thought out. You need to be confident in it. And finally, if you can, at least while you're trading, let go of your perfectionistic tendencies. Some of those are good, and some of those can slow us down. So if you constantly suffer from immediate regret, or if you constantly suffer from second guessing your trades, try this. Enter the trade according to your plan. Make sure you have a plan and enter according to it. Then once you've entered your trade, place automated stop orders with your broker. We call them hard stops. Place the first stop that the protective stop that you have figured, place it with your broker. That way, appropriate decisions are in motion and you can relax into yourself. Relax into yourself and your trades. Okay, if you want to become a consistently winning trader, please check out our 20% off sale on our simple yet powerful online trading programs that will help you increase your trading profits from now on. From swing trading to bottom fishing to 3 winning setups to trend trading and more, just click on the button below for more information. Until next week, have a great weekend. Keep green on your screen. I'm Toni Turner, and this is The Market Now.